What lies ahead for the UK housing market in 2025? Will it recover or face new challenges? With the government introducing new tax and rental policies, how should investors adapt their strategies? Welcome to UK Economy Navigator, the channel that helps you stay in tune with the UK economy. We focus on economic trends, property market developments, and policy updates, delivering clear and concise insights. Let's dive into the future of the UK economy together. Today, we'll dive deep into how UK government policies for 2025 will impact the housing market and help you prepare for the challenges ahead. By the end of this video, you'll have a clear understanding of the latest tax and interest rate changes, rental market reforms, and infrastructure investments that could influence the property sector. This knowledge will help you identify investment opportunities and avoid potential risks. In 2025, the UK government plans to adjust stamp duty and capital gains tax, increasing costs for investors. According to HMRC, the stamp duty for second homes could rise by 1% to 2%. For a property worth £500,000, this means an additional cost of £5,000 to £10,000. On capital gains tax, 30% of property investors profited from sales in 2023, with an average tax bill of £15,000 per transaction. If rates increase, profit margins will shrink further. To manage these challenges, investors might consider holding properties under a company structure to reduce tax liabilities. Knight Frank reports that 25% of overseas buyers adopted this approach in 2024. Additionally, the reduction in the capital gains tax allowance from £12,300 to £6,000 highlights the importance of precise tax planning. Early preparation and careful calculations are key to maintaining returns in a more taxing environment. The Bank of England's base rate currently stands at 4.75%, slightly down from the 2024 peak of 5.25%, but still significantly higher than the historic low of 0.1% in 2020. This high-interest environment is impacting property investors directly. The average mortgage rate in 2024 reached 6.5%, making monthly repayments for a £200,000 loan approximately £1,300, an increase of nearly 40% compared to 2022. This has dampened property price growth, with 2025 nationwide prices forecast to grow only 1%–2%, and prime markets like London potentially seeing declines. Investors should lock in fixed-rate mortgages to manage future costs and focus on high-yield areas such as Manchester, Liverpool, and Sheffield. According to Homelet, these cities offer rental yields of 6%–7%, with Sheffield standing out for its affordable property prices and strong demand from students and young professionals. Despite challenges, the rental yields and value for money in these northern markets remain attractive opportunities for steady returns. The government's rental reforms, particularly the proposal to abolish no-fault evictions, Section 21, have drawn significant attention. If enacted, this will limit landlords' flexibility during tenancy agreements. Meanwhile, rental demand remains strong. According to Homelet, the average UK rent in 2024 was £1,278, with an annual growth rate of 10.8%. In addition, from 2025, rental properties must meet EPC Grade C standards, but 60% of existing properties fall short. The average upgrade cost is between £10,000 and £15,000, creating additional pressure for landlords. To navigate these challenges, landlords should proactively upgrade properties to comply with regulations and enhance value. Thorough tenant screening is equally important to ensure rental payments are reliable and avoid unnecessary disputes. In 2025, the UK government will invest £5 billion in infrastructure and housing projects, including HS2 and public housing initiatives. According to Savills, house prices in HS2-linked areas like Birmingham and Leeds rose by 8%–10% in 2024, and this trend is expected to continue in 2025. Of the £5 billion, £3.1 billion will be allocated to public housing. However, rising construction costs may delay projects, further driving up rental demand. For investors, early investments in areas near major infrastructure projects offer strong growth potential. Additionally, urban redevelopment projects in cities like Manchester and Sheffield are boosting rental demand, providing stable cash flow and long-term appreciation opportunities. The UK housing market in 2025 presents both challenges and opportunities. While tax and rental policy changes add cost pressures, infrastructure investments and strong rental demand create pathways for growth. The housing market can feel like an intricate maze filled with risks, but also hidden opportunities. To succeed, investors need not only reliable data, but also strategic planning and flexibility to adapt to changing conditions. Enjoyed this video? Don't forget to like, subscribe, and share your thoughts in the comments below. See you next time.